Here we go. Okay, do you see, guys, this chart? This is the Bookmap on a 1 second. We are making milliseconds time frame. Why is it so? Because on milliseconds you can see clearer on a Bookmap. This is a 1 second time frame. What do you see on this time frame? There is a two-way to trade it. One way, which is actually not smart way, is to see this range, right? And trade from upper side of this range on the break to upside. And that's some of the people who you know, and I'm not gonna mention their name, they actually traded this way now. And people ask me, is that a smart way or a stupid way? I'm saying that is a stupid way. If the trading starts right here on the break, you see, you need to have a big stop loss. You're gonna say it's really common sense, but believe me, guys, believe me, it's supposed to be that simple. Look what's happening in this range. When I saw this, I'm like, oh, dude, this is exactly perfect conditions for me to explain it to you. Now, you see, now this blue 62 buys, what happens? They move the market higher. Then they move market higher, and there's a red bubbles, sellers. They try to sell one time, second time, couldn't get lower, even if you see it like this. What does it mean? Even if you think like this, what does it mean? That means they couldn't sell. Now, boom, they move it higher. So when you're seeing this range, because this is all about ranges or blocks, if you want to call it, when you see that market has actually done one time, get close to. Okay, should I make a copy of this? Okay, it's always the case, guys, that where is the stop and resistance in another range. So they actually hit this range over here, 45 and 62, and these guys prove themselves again over here that they don't want to give up, they want to buy, and they bought. This is the logic. So what is the best positions to buy is after pullback. Is that simple? Yeah. When we trading in momentum, when we trading with scalping, is best position for us when we know the general direction of the chart is going one direction, is going up, upper, higher, and higher. Then we trade in the same direction after pullbacks. When you see this on a Bookmap, you see definitely they don't let them sell here, even they try to sell over here, but then second time, boom, they get over here. It's a double bottom in this microstructure. It's a double bottom in this microstructure of the pullback. And this is the, guys, I was dreaming to get this chart for many days because this is like, this is a reversal, right? And this is another reversal right here. But when you have two of them as a kind of like a double bouncing from the bottom, this is the perfect. Two or even three waves gives you much more reliable entrance. Now, this is the third way, the pullback. Again, pullback, bounce up a little bit, then found the support again on the same level, because this is the range. What makes it, actually, the range is, let's see where I build it from, okay? You see this upper side of the candle? Now, boom, this is the range, okay? That's become a support for these guys. So now, first time support, second time support, perfect, ideal spot to enter into the trade. Now, if you wanted to and you want to be more conservative, you don't want to lose your account, you want to have a more conservative stop loss, then the third time when it's actually get over here is even a better spot. Why? Because now, let me, okay. Now, I want you to see what I see. I want you to see this range actually in this range, usually this, let me remove this, okay? Let me kill this one. And I'm gonna remove that, okay? Now, you see this one, when the price went into this resistance zone, because this is the second bounce, okay? And now you see even over here, there is a range, this range. Wow, 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 wow. This range, I love this range. No wonder why the price from this range, notice carefully, from this range we see extension. Extension means long impulse. This one, fantastic. But that range become a springboard for this candle to grow fast and furiously. That's why you see that this candle bounced from here, from this very support, and then we're seeing the false break. This is called a provocation. This is definitely, it's called a provocation. I mean, there's an inducement. You can call it different ways. It depends if you ICT follower or you, so smart money, whatever. So this is called provocation because this is the range that impulse came from, and now this is the provocation to provoke traders to trade in the opposite direction, and that is the best spot, lovely spot to enter. So again, guys, this is what we're considering. Okay, this is the top. Now, this is what we're considering. This is the first bounce, second bounce, first bounce, second bounce. Now, this is the support over here in this range. This is the range, micro range over here that provides extension where the people decide for certainty to go higher. Fantastic. Now, that range is play a good role, and this is the false break or inducement or provocation. And this is a lovely spot. This is the most secure spot to enter into the trade and grab all of this. You see this extension after this range, that extension after this range, provocation or a false break, whatever you call it, is the same stuff. And then what you're seeing from the about this range, and there's like a micro range over here, another extension or another impulse came from. You see, now this is the perfect place to enter. If you see on the chart what I'm saying, then this is the best way to actually execute your longs. And with on another chart, you actually can see the patterns over here, the footprint patterns. This is simple way on the Bookmap, okay, to explain you. And when you have it on a milliseconds time frame, you know the simple principle. What is the main idea behind this trading setup? Is you don't trade from the upper side of the ranges. You don't trade from upper side of this range because you're gonna be in trouble. You say, look, if you trade from upper side of the range, that's what people that you know, I don't want to mention it right now aloud, that's what they're doing right now. They're experimenting for trading to break out. Breakouts less likely to compare with the false breaks. You need to know the formula, okay? Now, you don't trade from the upper side, or you don't trade here on the upper side. If you trade from upper side over here, you don't know. I mean, this extension can go over there, but it may not. What you're seeing over here, that you're seeing this bottom side of this range, and you trade from here. You see, first bounce, you already, but it was not certain if that is the range going on here. But second time is definitely, you see, it's like a two twins. It's a perfect conditions, and you can trade from another, from over here, because it's already left this range and boom, bounce it up. So now this is like a third time support. But this is definitely, if you can say, hey, oh, like this is like from upper part of this range, this over here, but this is a different picture over here, right here. This one is a false break from this range. So trade from this is the lower part of that range, which we already got reaction from the lower part of that range. And when there is a false breaks or pullbacks like that, is a perfect condition. You're gonna say, hey, oh, like this is like so genius, so simple. Guys, that's why I like to trade on seconds, and I like to try to trade on milliseconds charts, which some of you will get hand of milliseconds time frame. You'll be successful trading on not on a New York Open, okay, volatility is too high, but on another markets which is slower than New York Open, maybe on a London or Asian session, or after closer to noon on a New York, so after 10 or 11 on New York time market. This is absolutely fantastic setup, and I hope I explain it to you one more time. This is the range. I mean, basically what we're considering, this is the top. This is, okay, look guys, this is the range, right? This is one, first I started with, this is the micro range, and boom, we've got the support, one time, second time. At the same time, when you see this as a pullback, right here, this is the pullback. You trade from the lower part of the pullback, not the higher part of the pullback. You don't wait the price to get over here on the upper side and trade from here. It's got absorption right now. There is some limit orders were sitting over there. So that's why. Okay, now, when you're seeing this range again, what's the best position to enter? From the bottom part of this range, if the whole trend is going higher, we're going up on a larger time frame. So then you build this range again. This range, we've got, you see support on this candle. That there is some people, what's most important about this very range to compare with this range, that we've got extension candle, extension means longer impulse from that very range. So this range is responsible for the people to actually accumulate and blast the price up, or nobody were resistant after this range. Okay, boom, we just went up. And so that's why this range is important. That's how you know what kind of order blocks are important. That's exactly. If you're seeing the extension after the order block, like over here, then actually, if you wanted to, let me give you a micro picture, like, because if some of you love the price action and blocks, you see this very last range, very inside of that range, last range, you see the price get bam inside of that and bounce it. So you can go with this large range, or you can go and slim it down to, let me more accurate, this is the order block. The price went and made a false break from the range that actually caused you extension, and then false break is expected, guys. This is the most lovely spots. It's not, this one is more like not a pullback, this is a pullback. But this is a provocation or inducement, or some people call it liquidity grab. And this is the best spot to enter into the direction to the main time frame. So this is just absolutely perfect situation. And if you want to make a screenshot, because this is great for any lessons you would like to teach somebody else, or repeat it yourself and see how simple it is. This is the pullback. This is a pullback. This is not a pullback. It looks like pullback too, but it's more like a provocation. So why I'm saying that? What's the difference? Because we build internal liquidity. You see these directions? You see these movements up and down, very uncertain, up and down. Building liquidity, that's the tops and bottoms. We build liquidity here, it's intermediate range, and then we boom grab liquidity on one side of this range, and boom grab liquidity on another side of this range above this little insider tops. Okay, we grab at that liquidity right over here. That what was the strategy behind the price movement. Okay, that's all what I wanted to explain it to you. Watch this video a few times. Wonder how simple, how amazingly simple it is. And that's why we trading NQ on 1 second, 30 seconds, and we can do it with the S&P in any other tickers as well. But this is an absolutely nice picture that explain the whole pullback strategy, because this is the pullback, okay? And this is the range. This is the range. Okay, make a screenshot of this, and now you know, and you can write your notes under each of these blocks. I highly recommend you to make a screenshot. So thanks everybody, and that was my simple strategy, and that's I trade every day, guys. And other indicators, which is a level 2, pulling, stacking, or market speed, actually helps, and delta 1 and delta 2 helps me to add more context into this picture. And when you add the other volume indicators, it's actually make a huge difference to make very precision entrances. Good luck to you. Trade it and see how it works, and you will trade it. You gonna love it. That's why you can make a 80 to 90% profitable win rate. No wonder. Okay, see you next time. Bye bye.